Hello students, today we are going to see chapter number 4, Journal of Standard 11th Commerce, subject account. So today we are going to see the transaction related to revenue as well as expenditure. In our last video we have seen transaction related to goods, assets. Again we have seen some liability account and loan account. Then we have seen transaction related to cash discount as well as trade discount, and that part 1 to 8 part is already linked in the description, and this is the 9th part of the same chapter. Today we are going to see transaction related to revenue as well as expenditure. As we know, in the business there are some expenditure we have to spend. That expenditure are called stationery expenditure, salary expenditure, factory expenditure. Sometimes in the business we can see that there are some taxes that we have to pay, that is our expenditure. Even then there are some other expenditure, that is non-cash expenditure, that is depreciation and other. So these are the different type of expenditure that we are doing in the business. Again there are the income in the business. That income is the interest income, brokerage, rent received and dividend received. These are the income that we are receiving in the business. So there is a rule. That rule is of nominal account that we are going to apply, and the rule is debit all the expense and loss, credit income and gain. So we are going to apply that rules to the transaction, and we are going to debit and credit according to so. So let's see the transaction, and here is your sum. Let's see the sum number 9. Record the following transaction in the journal of Arun Parekh. So here we are going to prepare journal entry in the books of Arun Parekh. Example number 9. Okay, so here let's prepare the journal. Debit amount, credit amount, date, date, particular, ledger folio number, debit amount, credit amount. So here let's start the journal entry. So very first transaction is a for business books of account is purchased for 650. So here we have purchased the books of account, that is called stationery expense. So here stationery expense account debit, as we have paid cash is going out of the business. So cash account credit. That journal entry we are going to pass. 2014 August 1st, stationery account debit. To cash account, and here amount is a 650 being books of account purchase for business. So that is transaction number 1. Now let's see the transaction number 2. Wages of rupees 200 rupees 100 paid in cash. So here we can pass the combined journal entry as well as separate journal entry, but here we are going to pass the combined journal entry, that is wages account debit, carriage account debit to cash account. Wages account debit, carriage account debit to cash account. So for that the amount will be 200 and 100, together it will be 300, being wages of rupees 200 and carriage of rupees 100 paid in cash for that. Now let's see the third transaction, that is commission received rupees 800. So here we are receiving income. So whenever we are receiving income, that income account we are debiting according to the rules of the nominal account. So here cash account debit to commission, that journal entry we are going to pass. And the amount is 800. Being commission of rupees 800 received. Now let's see the next. 10. Paid rupees 2,500 for painting work of shop. So here we have paint our shop. So that is the maintenance of the office and shop. So for that we are going to open one account. In that we are going to write all the expenses, and that account is called maintenance account. So for that maintenance account debit to cash account, and here the amount is 2,500. 2,500 being amount paid for painting of shop. So for that, now let's see the next transaction is of date number 20, that is light bill of 1,800 paid by check. So here light bill is our expense, so light expense account debit, and here that expense we are paying by check, so bank account is going to be credit. So here journal entry will be light expense account debit to bank. Electricity expense account debit to bank account. Here amount will be 1,800. 1,800 being electricity bill of rupees 1,800 paid by check. So for that, okay. Now next rupees 1,200 paid for refreshment at inaugural function of shop. So here we have paid expense that is non-recurring. So for that we are going to open one account that is called sundry expense account. So journal entry will be sundry expense account debit to cash. Sundry expense account debit cash account, and the amount is a 1,200. B. Refreshment expense paid of rupees 1,200 at the time of inaugural of shop. Now let's see the next transaction, that is a check of rupees 900 received for brokerage. So here we are receiving brokerage and that is our income, and that we have received through check. So bank account debit to brokerage account, that journal entry we are going to pass. 30 date bank account debit to brokerage account, and the amount is a 900. Being brokerage of 900 received. Now let's see the next transaction. A currency note of rupees 50 is eaten by goat. So that is our expense, and for that sundry expense account debit to cash, that journal entry we are going to pass. To cash account, and here amount is a 50 rupees. Being a currency note of rupees 50 eaten by goat. So for that. So here our sum is finished. Now we need to make the total, and that total is 8,200. 8,200 total. So student, you may note down this in your notebook. Thank you for watching this video.